Welcome to The Deep Dive, the show where we cut through the noise to get to what really matters in the market. Today, we're taking a magnifying glass to GitLab's Q2 fiscal year 2026 earnings call. We're going to unpack their latest performance, dive deep into some significant strategic shifts, and figure out just why the market had such a strong immediate reaction.
Indeed. GitLab delivered a fascinating quarter, blending strong operational execution with some truly ambitious strategic pivots. We'll dissect the core numbers, the significant leadership changes, and their aggressive AI roadmap. Our mission today is to give you clear, actionable insights into what's truly driving this story, helping you see beyond the headlines.
Okay, so let's jump straight into those headline numbers. For Q2, GitLab reported revenue of $236.0 million. That's a really solid 29% year-over-year increase, comfortably beating what analysts expected.
Yeah, a good top-line beat.
And their non-GAAP EPS, which, for those less familiar, essentially means their core profitability excluding certain non-cash accounting items like stock-based comp, that came in at an impressive $1.24, significantly surpassing expectations. So a pretty powerful beat on both the top and bottom lines.
Right. And what's particularly striking here isn't just the revenue growth, but the significant operating leverage they demonstrated. Their non-GAAP operating margin reached 17%.
Oh, 17%.
Yeah, that's a substantial jump from just 10% in the prior year. And on the cash front, they generated a robust adjusted free cash flow of $46.5 million, nearly a 20% margin. This is a dramatic increase from the $10.8 million previously, which clearly signals a much more efficient operation across the board.
That is a big jump in efficiency. And on the customer side, which often tells a deeper story, we saw continued expansion. Those customers generating over $100,000 in annual recurring revenue, or ARR, grew by 25% year over year, now totaling 1,344.
Solid growth there.
And perhaps even more importantly, their dollar-based net retention rate, or DBNRR, held strong at an impressive 121%.
Yeah, that 121% DBNRR is key because it tells us existing customers aren't just sticking around, they're actively expanding their use of GitLab. Over 80% of that DBNRR growth was driven by seat expansion, essentially. More of our customers, developers, and teams are adopting the platform.
Right. More users within the same company.
Exactly. The remaining growth came from things like increased customer yield and tier upgrades. This isn't just about adding new logos. It's critically about existing users continually finding more value and deepening their reliance on GitLab.
And it's that hunt for value, isn't it, that really pushed their premium offerings like GitLab Ultimate to such a strong position. Tell us more about how those higher tier solutions are performing.
Absolutely. A key indicator worth highlighting is how their premium offerings are performing. GitLab Ultimate now represents 53% of total ARR.
53%.
Yeah. This signals a clear and accelerating shift towards higher value enterprise customers adopting their comprehensive DevSecOps and security capabilities. For our listeners, DevSecOps is about weaving security directly into every stage of software development, rather than, patching it on at the end.
Building it in from the start.
Precisely. It's truly building security in from the ground up, which is critical for compliance. For instance, 8 of the 10 largest deals this quarter included Ultimate, with customers like Chaos choosing it specifically for end-to-end DevSecOps and to help with SOC 2 readiness. It's a crucial audit for securing customer data.
Okay.
And beyond Ultimate, GitLab Dedicated also saw impressive growth, contributing approximately $50 million in ARR, up 92% year over year.
92% growth for Dedicated.
Yeah, huge jump. This was bolstered by a significant 3-year strategic collaboration agreement with AWS, specifically expanding GitLab Dedicated for regulated workloads. This extends their reach into highly compliant environments for major enterprise and government clients, like a top U.S. bank they mentioned.
That's powerful validation of their enterprise strategy, especially in those regulated sectors. But the true narrative of this quarter isn't just in the numbers, is it? We also saw some pivotal shifts in leadership and strategy that are really setting the stage for GitLab's next chapter. Let's start with the big one.
The CFO change.
Exactly. The company revealed its CFO will be stepping down in mid-September, with the vice president of finance stepping in as interim. That's always something investors watch closely.
It naturally raises an important question about continuity, particularly when a key financial leader departs. No doubt about that. But GitLab also proactively brought in new C-suite talent. A new chief product and marketing officer, Manav Khurana, who is known for product-led growth.
PLG focus.
Right. And a new chief information officer, Manu Narayan. These appointments are clearly intended to reinforce 2 parallel growth tracks. A sales-led approach, which is more traditional, and that product-led approach. Product-led growth, in GitLab's context, means designing the product itself to drive adoption, expansion, and virality, often through superior user experience and built-in self-service, aiming to reduce reliance on direct sales for every new user.
So making the product sell itself, essentially.
Kind of, yeah. It's a deliberate strategy to scale past the billion-dollar mark.
So we're talking about multi-pronged attack on growth. On the sales-led side, the chief revenue officer, who just completed his first quarter, is already implementing substantial changes. This includes establishing a global new business team focused purely on acquiring new customers.
It's a first-order focus.
Right, along with improved post-sales motions to accelerate value realization and module adoption. They're also evolving their enterprise sales motion with more sophistication, like deeper pipeline coverage and better sales playbooks for the AI opportunity.
And stepping back, these go-to-market organizational changes are foundational for their next phase of growth. Management anticipates these initiatives will ramp up over the second half of this fiscal year, with the benefits expected to materialize more fully in fiscal year 2027.
So FY27, that's a longer-term view.
Exactly. This suggests a strategic long-term view that prioritizes future growth and scalability over immediate short-term boosts. They're planting seeds for the next few years.
Now let's talk about the innovation pulse, which is buzzing around the GitLab Duo agent platform. This is currently in public beta with general availability targeted by year-end, contingent on reaching their quality bar and, crucially, customer willingness to pay. This sounds like a major step.
It absolutely is. This platform represents a pivotal shift in their monetization strategy. GitLab is evolving from a purely seat-based pricing model where you pay per user to a hybrid seat plus usage model for these agentic AI workflows.
Agentic AI, okay.
Right, for our listeners, agentic AI refers to AI models that can perform more complex multi-step tasks autonomously, like a virtual assistant for developers, going beyond simple code suggestions. Customers will receive included usage with their base subscriptions and then have pay-as-you-go or committed tiers for additional usage.
Ah, like a phone plan model.
Yeah.
Base service plus overages.
Exactly like that. This consumption-tied approach could significantly expand monetization opportunities by layering usage on top of seat expansion as customers increasingly leverage AI.
Interesting. And they're not going it alone with Duo. The platform already integrates with major AI providers like Anthropic, OpenAI, Amazon Q, Google, and Cursor, offering a very broad ecosystem from the start. That almost sounds like GitLab is building the Switzerland of AI DevSecOps model-neutral, cloud-agnostic. Is that a fair analogy?
That's a fantastic analogy. It really highlights GitLab's differentiation strategy. They position themselves as an AI-native DevSecOps orchestration platform, not just another code generation tool.
Right, more than just code completion.
Exactly.
Yeah.
While AI can handle about 20% of a developer's time for simple code generation, GitLab is focused on the remaining 80%, managing changes across the entire software development lifecycle. By embracing this open ecosystem, they allow customers to use their cloud and AI providers of choice within the GitLab platform, which is critical for security and compliance in enterprise environments.
Yeah, flexibility is key for enterprise.
And this model-neutral and cloud-agnostic approach is a significant competitive advantage, reducing vendor lock-in for their customers.
That makes perfect sense. Early traction for Duo is notable too, with weekly active usage increasing nearly 6 times year to date.
Albeit from a small base, yeah.
True, small base, but strong growth rate. Customer surveys also indicate strong future adoption, with 91% believing that AI-native dev tools will increase their use of GitLab within the next 24 months.
That's a pretty compelling vote of confidence from the user base.
Okay, so despite beating Q2 expectations and raising non-GAAP profit guidance, the market had a negative immediate reaction after hours. The stock saw a decline. Given all this positive news, what gives?
Well, this near-term caution stemmed from 2 main factors that the market seemed to fixate on. First, management maintained its full-year revenue outlook rather than raising it, which some investors might have prematurely anticipated given the Q2 beat.
Right, expectations maybe got ahead.
Possibly. And second, the announcement of the CFO transition. While the underlying operational execution was strong and profitability guidance was indeed raised, the market appeared to prioritize the unchanged top-line guidance and the leadership change as immediate uncertainties.
Okay. And management did give some color on that guidance.
They did. They clarified that the full-year revenue guidance was maintained to account for those ongoing go-to-market organizational changes, acknowledging there would be a ramp-up period.
The changes need time to work.
Exactly. and also some incremental softness in the small and medium-sized business, or SMB segment.
Yeah.
They noted that SMB is a relatively small part, representing roughly 8% of their total business, and experiences more budget pressures.
So a minor headwind there.
Relatively minor, yeah. If we zoom out, the broader implication is that GitLab is strategically investing in its future growth engines with new leadership and a clear AI monetization roadmap. The shift to a hybrid seat-plus usage model, especially with the Duo agent platform, positions them for compounded growth from both seats and consumption as enterprises scale AI software delivery.
So multiple growth levers.
Right. The SMB softness is a minor headwind, but the focus remains squarely on enterprise expansion and AI adoption, which are the larger, more durable growth vectors. The market's immediate reaction seems to have glossed over these longer-term, more powerful trends.
All right, let's switch gears for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea, just like a hedge fund analyst might.
Okay, let's speculate a bit. Given the market's knee-jerk reaction to what are essentially near-term, non-fundamental headlines, the CFO departure and the maintained full-year revenue guidance, we believe there's a temporary dislocation in GitLab's valuation. The company demonstrated exceptionally strong Q2 execution, significantly expanded margins, raised profit guidance, and laid out a clear, compelling AI monetization strategy.
Positioning it as that orchestration platform.
Exactly, positioning it as an operating system for AI-native DevSecOps orchestration. The announced go-to-market changes are for long-term benefit, with impact expected in FY27, making any current softness or disruption purely short-term. The market appears to have over-indexed on perceived near-term uncertainty, completely overlooking the deeper positive fundamental shifts and the significant long-term optionality.
So here's the idea then. Consider a long position in GitLab, potentially through something like a long-dated call option strategy, maybe expiring in late FY27 or early FY28. This allows you to capitalize on the market's current overreaction while patiently benefiting from the anticipated ramp-up of the new sales initiatives and the full general availability and monetization of the Duo agent platform as its usage-based model truly takes hold.
You're betting on the strategy to mature, essentially.
Okay.
And furthermore, since the outgoing CFO is headed to Snowflake, one could argue for a potential paired trade.
Oh, interesting angle.
Yeah, maybe go long GitLab on this dip and consider a short position or perhaps a reduced allocation in Snowflake. This acknowledges the market's often sentiment-driven trading around executive moves, while betting on GitLab's robust long-term thesis that appears, currently undervalued due to non-fundamental near-term news. It's a play on smart money, eventually recognizing the underlying value.
A classic sentiment versus fundamentals play. Oh. And that wraps up our deep dive into GitLab's Q2 FY26 earnings. We've seen a company with strong financial performance, a strategic pivot towards becoming the AI-native DevSecOps orchestration platform, and significant leadership changes designed to drive future growth.
Yeah, and I think the true genius here isn't just about the AI roadmap itself. It's how GitLab is leveraging Duo to solidify its position as the operating system for the entire DevSecOps lifecycle. This strategy makes them indispensable, future-proofing against commoditization in a way many pure code gen AI tools can't.
Becoming the central hub.
Exactly. That's a subtle but critical insight the market seems to be missing in its immediate reaction. Something to think about.
We hope this deep dive has given you a clearer, more nuanced understanding of GitLab's quarter. Remember, this content is for informational purposes only and is not financial advice.
As always, we encourage you to continue your own research and due diligence. What stood out to you from this earnings call? We genuinely love hearing your insights.
That's all for the deep dive. Until next time, stay informed.